Hello traders, welcome back to my YouTube channel. I believe you have watched the last video which I released on how to install the EMA indicator, or maybe you use the MetaTrader 4 or the 5 or the trading view, and I believe now you know how to implement it on your chart. So in this video I'm going to show you how to use the EMA indicator to trade like a professional traders do. And then if you haven't watched the video on how to implement the EMA indicator on your trading chart, at the bottom of this video, I have a link right there. Click on that link so you can go through the video so you can understand how to install the EMA indicator on your trading chart. So I'm going to show you right now on my chart. So let's get into the video right now. There are two ways whereby I use the EMA. The first usefulness of the EMA on my trading chart is to identify change in trend or the strength of a trend, while the second usefulness is to identify dynamic support and dynamic resistance. So I'm going to show you how to use the EMA to identify change in trend and then know the strength of a trend. Here I have the chart of the British pound sterling against the Japanese yen, and then I'm going to show you guys how I can use the EMA right here to figure out a change in trend on my chart. So right here guys, you can see I have a series of consolidation phase at this zone right here, whereby I have the shrinking, that is the coming together of the 10 and the 20 EMA. Whereby right here, what this simply represents is there is a possibility of a change in trend. So whenever you see your EMA, when they come closely together without any space between them, it is a signal of a consolidation phase, or there is a possibility of a change in trend approaching, like we did have right here. You can see at this zone right here, we can see how the 10 and the 20 EMA actually crossed each other, and we have this trend from the upward rally which turned to a bearish downward rally. So here is the chart. You can see for the upward rally right here, we have it crossing each other right here. Then we have a massive bearish downward trend. So let's zoom in so we can figure out how it actually did happen. You can see after we have a series of consolidation phase at this region right here, this was a series of consolidation. We have the first movement up, the second right here, and the third right here. Then we have the 10 and the 20 EMA crossing each other at this phase right here. Then what happened right next? We have a massive rally downward. So whenever you figure out your EMA, maybe the 20 and the EMA 10 actually cross each other, it's a signal of a change in trend. The change in trend can simply be in an upward movement or in a downward movement. So I'm going to show you guys on the whiteboard on my PC how this can actually work out and how you can identify it. In an upward rally, where we have an upward rally, sorry, I'm going to represent this with a black color. Okay, in an upward rally, where we have a series of a upward rally, something like this, and then we have the 10 moving average, respecting price, and then we have the 20 moving average like this, and whereby the 10 moving average cross the red period. Remember, the red represents our 20 EMA, whereby the 10 is a blue. Okay, so whenever you are in an upward rally, whereby the 10 EMA crossed over the 20 EMA to the downside, whereby the 20 period or the higher period is above the lower period, it's a signal, an indication of a change from the bullish rally to the downward rally. Take note, here is a 20 EMA. Now the smaller EMA, that's a 10 EMA, now cross the bigger EMA, which simply represents the 10 EMA right now is now at the bottom, whereby the 20 EMA, the bigger EMA, is now at the top. So whenever you figure out this on your chart, it's a signal, an indication of a rally is trying to change from the bullish side to the downward side. Likewise, when you have the opposite, whereby we have a downward rally, something like this. Next, after this trend, we have a downward rally like this. We have a downward rally, and then we have our 10 EMA will be low, okay, and then where we have the 20 EMA, remember, it will be at the top, and then it gets to a point whereby the 10 EMA cross above the 20 EMA. It's a what? It's a signal. It's a signal of a possible change in trend. Okay, you can see how they cross each other right at this zone right here. See that? We did have also at this zone right there. So whenever you figure out this kind of action, whereby your 10 and 20 EMA cross each other, it's a signal of possible change in direction of the previous trend. So that is how you can use it to figure out a possible change in trend. And then the second I'm going to show you guys is how to use the EMA to figure out how strong or how weak a trend is. So right here I have the chart of the British pound against the Japanese yen as well, and you can figure right here I have a downward rally right here and then an upward rally right here. So how can I figure out how strong is this bearish trend is, and then how can I figure out how strong is this bullish trend is right at this zone? It's very, very simple. All you need to know to figure out is the distance between the two EMA is gonna tell you how strong or how weak the trend is. So let's say, for example, after we figure out a change in trend right here, and then when price is moving downward right here, you can see the distance between the 10 and the 20 EMA. Can see the distance away from each other. So the further the distance from each other, the more strong the trend is, and the closer the EMA it is together, that means the weaker the trend is. Like we did have right here in a state of consolidation phase right here, you can see how close the EMA 10 and the 20 is at this zone. Likewise at this zone right there. So whenever you figure out your 10 and 20 EMA, or which period you are using, maybe you have your 10 EMA, something like this, and then you have your 20 EMA, they are very, very close to each other, something like this, then it simply makes right here is a weaker trend. And then when you have them far away from each other on your trading chart, then it's an indication that this trend is very, very stronger. Let's say, for example, so when you have your EMA, let's say, for example, we are in an upward rally, something like this, and then you have your 10 EMA like this, and whereby we have our 20 EMA far away from each other, and then we have something like this. We have it something like this, okay, something like this. Then right here, what this simply represents is you can see the distance from each other right here, the distance from each other right here, the distance right here, the distance right here. It simply means right here this trend is very, very strong. So the farther away from the first the 10 EMA and the 20 EMA, the stronger the trend is, and the closer they are to each other, like we did have right here, simply represent the weaker the trend is. So this is how you can use your EMA to figure out how strong a trend is. Like we did have right here, you can see on this trend right here, we have the distance right here. You can see the distance away right here. It represents this trend is very strong right here. You can see how close they are together right here. It's getting weaker right here. And then right here again, it shows how very strong the trend is because of the distance from each other right here. And you can see how the trend fell in a very aggressive bearish trend downward. And then right here, you can see how close the EMA are together. And then right here, you can see the distance. It shows this very, very strong right here. And you can see all the long bullish engulfing bullish bar right here without any bearish candle right here. Likewise, a bearish candle right here, you can see how the big candles are, which shows a strong trend, also strong trend. Likewise, right here you can see the bullish candle, bigger bodies. As well, you can see the consolidation phase right here, how choppy the market is, which shows state of consolidation, and the trend is getting weaker. So the next I'm going to show you guys is how you can use the EMA for a dynamic support and dynamic resistance. This is very, very, very important, and then it's one of the factors I look out for whenever I'm trading prono on my chart. I want to figure out to combine this with a lot of factors whereby I can build out a lot of confluence factors to support my trading analysis, my technical analysis on my trading chart. Okay guys, now on the same chart of the British pound sterling, but right now it's paired against the USD. I'm going to show you what I mean by dynamic resistance and dynamic support on my chart. So how did I use the EMA to identify dynamic support and dynamic resistance? Here is an upward rally right here and a downward rally right here. Here is it, an upward rally right here and a downward rally right here. So where is my dynamic support and the dynamic resistance? Remember, in an upward rally, we tend to have support, whereby price makes a pull down and then support reject price upward. And then in a bearish trend, whereby we have a pullback upward, that is a low high, and then price makes another reversal of trend to the previous normal direction. So here is an example of my dynamic support right here. We have it right here, we have it right here, we have it right here, we have it right here. So you guys can figure out what is actually happening right here. When price got to this medium right here, what happened? We have rejection of price by the 10 and the 20 EMA after it crossed each other at this zone right here for an upward rally. And then we have the 20 right here, which reject price upward. And then we have the 20 right here, which rejected price upward. You can see how it's rejected price upward, and the same goes right here, rejects price upward, and the same goes right here, rejects price upward. So in an upward rally whereby you have a pullback of price or a counter trend, the EMA can serve as a dynamic support in an upward trend or dynamic resistance in a downward trend. So here right here is an upward rally, and the function, the role, the obligation of our EMA right here is to give us a picture, to give us a clue of dynamic support right here. You can see after the downward pullback right here, it rejected price upward for another rally up. Same right here, the pullback of price, the 20 EMA rejected price upward. While right here we have the 10 and the 20 at the same time reject price upward. Right here we have the 20 which rejects price upward. Also the 10 as well acts as a dynamic support right here, and then right here. You can figure out how they support the trend right here. And then right here we have the 20 and then the 10 cross through the body right here, and right here we have the 20. So this is how I use the EMA for my dynamic support in an upward rally. So in an upward rally whereby I have price makes a rotation upward and then I have a pullback against the trend, I look out for where the EMA will definitely act as my dynamic support. So then when I figure out that, then I can look out for a bullish price action continuation to the previous direction of trend. And then the more confidence factors you have in conformity with your EMA, the more reliable the signal is. That is whereby I have to combine it with resistance and the support zones. So this is how you can use the EMA for dynamic support in an upward rally. So after a pullback of trend, you look out for a zone whereby the EMA will reject the price upward. And then again right here, when price moves up again for upward rally after a pullback, remember you don't buy high, you buy low. Likewise in a bearish trend, you don't sell low, you sell high. So that is the function of the EMA right here. It helps you to get in in the trend at the right zone, whereby at the right zones of pullback of price. So, and again right here, if we have our 20 EMA, our 10 EMA goes up right here, can reject price, or the 20 right here rejects price. So this is how I use my EMA. And then let's get right now on the bearish trend. Same goes for the bearish trend right here, and then you can figure out right here it acts as a dynamic resistance, and the right here dynamic resistance, right here dynamic resistance, and the right here dynamic resistance. So you can see a pull, we have a downward right here, we short pull back up right here, we have it downward, and then it pull back right here, we have it downward, a pullback right here, we had it downward, and the pullback right here, we had it downward. So this is how you can use the EMA as a dynamic resistance in a bearish rally, in a bearish rally down, bearish trend, whereby when price makes a pullback, a counter trend, a pullback to form a low high, you look out for your EMA to act as a rejection level, as a dynamic resistance. Then you look out for a bearish price action, then you go in direction of the trend, just like we have a bearish engulfing bar right here. On the right here, we have a bearish outside bar right here, and then right here we have a bearish engulfing outside bar right here, and right here we have a rejection bar right here. So this is how you can use your EMA as a dynamic resistance in what? In a downward rally, like we did have right here is the 10 EMA, and then the 20 EMA, 20 EMA, okay, whereby they keeps on rejecting price right at this zone right here. So now I'm going to show you guys how to combine the dynamic support and resistance with confluence factor, because they work best when they are being combined with confluence factors such as that is demand and supply zone, there is a resistance and support levels. So I'm going to show you an example right here on this chart. So let's zoom out. Okay, now I zoom out right here. So what I need to do right now is I need to implement my key level structure. I have a course on this. If you don't know how to implement support and resistance on your chart, I have a course on one of my playlists. You can go through. I have one of the video right here. I think it is in the VIP members video. So if you want to join my free forex trading class, there's a link at the bottom of this video. Click on that link so you can register for my free forex trading class. Right there, you're gonna get access to private videos which is not public on my YouTube channel. Once you enroll for my free forex trading class, you get access to my private educational videos, which is only opened or available to my students. So I'm gonna implement my resistance right here. I have resistance right here. Then right here I have a support right here. I'm trying to cash these low swings right here, then these high swings right here, likewise these high swings right here, and then again I'm gonna try to implement right here. You can see I have a resistance right here and then a low swings right there. So you can see right now, and then let's try to see if we can cash a resistance right here. I think we have one, we had one right here, and the same right here, had one right here, even though it's somehow very choppy right here. So I can see call this right here, but it's somehow very choppy right here. So let's view how we can trade this. So right here you can see I have a key level structure right here, I have a key level structure right here as a support for this rally right here, and then I have a key level right here. You can see how the 20 EMA collides with my support level right here, acting as a support right here. You can see the collision right here. So here comes the idea. We have the support level right here, and then the dynamic trend line right here. You can see how they collides right here and then pull price upward. So right here is an example of a confluence factor, and then not only just a collision right here. We can see the bar which formed right here is a bullish reversal bar. whereby I have a bullish reversal bar, and then what I have is key point right here. That is a key level structure right here, key level right there, and then what I have my EMA right here. So I have 3 factors right here. Okay, 3 factors supporting my trading decision, and then the fourth factor right here is the trend. It's in a bullish rally. You can see that I have a bullish rally. Okay, so these are the confluence factors which I look out for whenever I want to use my dynamic, that is a EMA for my dynamic support and resistance. So this is one of the factors which constitute to this strong aggressive bullish rally, which actually broke this resistance level right here, and then which we did have a pullback of price to this level, key level structure, which was a resistance right here, resistance right here, resistance right here, and then what next? Price retested it at this zone right here with a bullish pin bar, and then the 20 EMA again collides with this resistance level, and then which bullish pin bar again, and then it reverses the trend upward in a bullish rally again. So right here we have 4 confluence factor. Okay, right here again we have 4 confluence factor. Right here again we have 4 confluence factor. So this is how I use my dynamic or resistance or support to combine with my different confluence factors. So the more confluence factors, the more factors you have supporting your EMA, the more reliable the EMA turns out to be. Then you can see right here on the bearish trend right here, whereby we have resistance right here, as was an extension backward right here. You can see there's bearish rejection bar, which was been rejected by our 10 EMA right here for a downward rally, and then again an outside bar right here, rejection by 10, EMA downward, also bearish, prayer right here, rejection by 20 EMA in connection with a key level which is now acting as a resistance right here. Also right here we have it key level, a key level structure right there, which was now acting as a resistance right here. So this is how I use my EMA for dynamic resistance and support on my trading chart, whereby I look out for so many confluence factors like the key level support or resistance zone, like the price action signal, and then I look out for what is the trend. How is the trend? Is the trend LD? Is in a bullish trend? Is in a bearish trend? And then I look out for the dynamic support or resistance. Is it the 10 or the 20 EMA, which is actually acting as my dynamic resistance or dynamic support. So guys, this is how I use the EMA on my trading chart. One of the mistakes inexperienced traders or beginners make in the market is actually using the EMA to enter a trade once it crosses. Once an EMA cross on your chart, it doesn't actually mean you have to enter a buy trade, or maybe when it crosses downward, something like this, it doesn't mean maybe you have to sell. No, it doesn't mean that. It's simply showing you a direction, that is a change in direction of a trend, but there are a lot of confluence factors you have to relate it to. Like we did have right here, it crossed right here at a key level with a signal price action bar, and then with a rejection by our EMA. So these are the things you have to combine together. Remember, the more confluence factors, the more factors you have supporting your analysis, the more you increase your chances of having a winning trade. So guys, I hope you now understand how to use the EMA to trade like a professional trader in the financial market. If you want more educational videos like this kind, do not forget to hit on the subscribe button, as well click on the notification bell, so whenever I release educational content of this kind, you're gonna be the first to be notified. If you haven't joined my free forex trading class, there's a link at the bottom of this video. Make sure you click on that link so you can benefit more in our free forex trading class. It is free, you don't have to pay any fee. So guys, like the video, share this video, comment so I can know how you feel. That's all I have for you in this video, and then looking forward to seeing you watch the next video. Do have a wonderful day. Peace.